Anyone hoping the US economy would finally return to normal in 2022 following more than 2 years of dislocation from the COVID-19 pandemic has been sorely disappointed. A war in Ukraine, elevated inflation and higher interest rates are raising concerns that the US economy is on the brink of a recession. Fortunately, the US labor market remains strong, and experts are divided on whether or not a recession is inevitable in this unique economic environment. Recessions have been a relatively common occurrence over the past century and have produced attractive opportunities for long-term investors. What is a recession? There is no universal definition for an economic recession, but analysts and investors commonly define it as 2 consecutive quarters of negative gross domestic product. By that metric, we are already in one. The US GDP contracted at a seasonally adjusted annual rate of 0.9% in the second quarter of 2022, after dropping by 1.6% in the first quarter of 2022. This is why you'll hear many pundits, especially in an election year, argue that a recession has commenced. Why are Americans worried about a recession? After years of lockdowns and restrictions, many observers hoped pent-up demand would generate a post-pandemic economic boom in 2022. Instead, Americans are worrying about inflation and recession. Supply chain disruptions in Asia and economic sanctions against Russian oil and gas have exacerbated the US inflation problem that began in 2021. Consumers are feeling the brunt of increased costs for everyday goods and services. The Bureau of Labor Statistics reported in September that the Consumer Price Index, a measure of the cost of living, soared by 8.3% from last year, even as gas prices started to decline. In response to alarming inflation, the Fed has raised the federal funds rate substantially this year, including 75 basis points rate hikes at meetings in June, July, and September. Should you be worried about a recession? If the US does slip into a recession sometime this year or in 2023, there's no reason for investors to panic. Recessions don't historically last very long. The average duration of a US recession since World War II is just 11.1 months, and the COVID-19 recession in early 2020 lasted just 2 months. US recessions are also fairly common. Since World War II, there has been about 1 US recession roughly every 5 years. While recessions can lead to job losses and other financial difficulties for Americans, they have historically been excellent buying opportunities for long-term investors. It can be extremely difficult for investors to time a market bottom perfectly, and stocks tend to bottom several months before a recession when peak pessimism is reached. But some stocks even have a track record of performing relatively well during recessions. For example, Target, Walmart, and Home Depot shares significantly outperformed the S&P 500 during the 2020 and 2008 recessions. Save while you have the extra money because a recession can quickly change your circumstances. If you don't have a good emergency fund, consider canceling a vacation or putting off an expensive renovation project that isn't necessary.